Wow, Sami, Abusaad here. What a day. The Red Dog threw you under the carpet, under the rug, and making you come down on a day of CPI. What an introduction. Let's just talk and give you a background here on Sami. He's a professional trader at T3 Live. He's also the director of education, specializing in gaps. We got a lot to talk with you about today. Climatic and reversal strategies. Wow, that's coming into play. You even created your groundbreaking earnings play, a unique strategy for predicting post-earnings moves in stocks. Sami, welcome to the show.
Thanks for having me.
All right, so let's just start here with gaps, and we're going to be dealing with a lot of gaps today. Talk to us about your strategy, and then maybe we can pull up a couple stocks because it could be gapping all over the place today.
Absolutely. So with gaps, the idea is that the reason why I like them is that because they generate a 5-day move in 30 minutes or less. So they create a lot of momentum because nobody's has had the time to exit, and so the next day they wake up and they're down $5,000-$10,000, and they start to act on emotion rather than hard cold logic. And so as a trader, I can see that reflected on the chart and can take advantage of it. So that's why I really, really like gaps.
Okay, so you wait for the move after earnings. Are you trying to anticipate the move before earnings, or are you in there and then do you pick up the pieces afterwards?
Yeah, so I have two different strategies. One where I anticipate the move before earnings and I get in before the company reports, and that's a swing strategy. And I have a day trading strategy, which is after the open. So I look for, I scan the gaps list and I pick out my favorites and I focus on them and I trade them at the open.
Okay, so with the pre-earning strategy, that's something that Dennis, we talk about with our listeners all the time, is that alpha. In a good market, a bull market, man, you got to own a stock ahead of the report, especially a major company. So are you playing that alpha and then exiting ahead of the report, maybe taking a little piece through? Tell us your strategy as far as holding the stock into the report.
Yeah, so I in 2010 or so, I've been trading for full time for 17 years. Makes me look old, but
But you're not. How old are you?
I'm 41.
Oh, that's young.
In 2010, I started to notice while scanning after the close every day, stocks gapping up or down off of their declining or rising 20-period moving average on the daily chart. But I completely ignored it for like 7 years. And in 2017, I started to trade those companies before they reported. So basically, what I'm looking for is a really strong stock that has pulled back to their rising 20-period moving average on the daily chart before earnings. And I also want to have some panic selling before earnings because I'm looking for basically the Michael Jordan stock, something that's really, really strong, but investors are panicking out of it right before earnings because they're expecting a bad result. So you got a strong stock with low expectations. That's a recipe for a gap up the next day. Or vice versa when we're playing short. You have a weak stock that's actually running up into earnings. That's, again, a recipe for a gap down the next day. So that's what I like to do. This market, this quarter, I can look at my tracking sheet, which is shared with all my subscribers. I've done 81% of the plays were long. Only 19% of the plays were short. The market has been bullish, so it makes sense. But a lot of times I do a lot more shorts than I do longs, depending on the market environment.
Okay, so are you eyeing any gaps today? I mean, we got them all over the place. I don't know if you have favorite stocks that you like to look to, but let's see what we got in the dog. Ooh, the data dog, boy, that was about $6 higher when we were talking about it. Is there any individual issues that you want to talk today that maybe you played into it, and now you're going to replay it after the earnings?
I haven't yet scanned
Oh.
because I was waiting for the news to come out because I knew it would move the market. But there's going to be a lot of gaps today, like a ton.
With the market opening down like this, I mean, this has been such a buy the dip mentality. But it's changing now. Are you gonna just go with what the scans tell you? Are you leaning more towards the long side or short side?
No, I will go with whatever gaps I find that look good, I'll just go with those. The market is extended to the upside. We got a reversal bar yesterday for the first time in a while.
You did, I
I
know.
was expecting a gap down, so I'm positioned that way. We'll see.
All right. You also have two other strategies, a climatic and a reversal strategy. They kind of both the same thing there, but talk to us about the climatic one first.
Yeah, so the climactic strategy is when the stock free falls. It becomes like a waterfall and starts to accelerate, and then I'm trying to pick the bottom. Or when the stock goes crazy up, vertical almost, parabolic, and I'm trying to pick the top. The idea is that there are a limited amount of people willing to buy or sell a stock at any given time. And when the stock runs out of those buyers or sellers, that's when I step in and provide the liquidity, or basically take the other side. So you can see it when you look at the chart, because the stock, when you're watching a stock that's dropping, you'll notice that at some point traders panic out of it. And how do you notice it? Because it starts to print wide range bars, and then the volume spikes.
Exactly.
So that's when I look for a reversal bar, and then I get in it.
We talk about this too. You like to see that big volume, and then sometimes the volume kind of like goes lower, then you have a couple, maybe an inside day, or do you use I look for the volume decline to get in, or are you more focused on the actual price of potential double bottom or triple bottom?
No, I'm more focused on the price always, but definitely I look for a volume spike to tell me that traders have just panicked out of it. The last group of sellers just sold out. So that you get the volume spike, that's when I start to look for an entry.
Okay, so in the reversal strategy, kind of the same thing now?
Similar, very similar on the intraday. On the daily, it's basically just looking for a bounce off of the 20. But on the intraday, it's the same as the climactic strategy.
Okay. All right. And then as far as individual issues you go today, I got a quick question. Do you make any use of options in your trading?
I don't. I tried options before, and I decided, you know what? I'm an equities kind of guy, love equities. And I tried them for a while, and then I decided to go back to just straight stocks.
Tough. What about like the fundamentals of stocks, the fundamentals of the markets? Is that something that you just you rely on your technical analysis and use these fundamental events as catalysts, or are you pinpointing the Fed and looking to forecast those moves?
I use the fundamentals only for entertainment purposes, meaning you can talk about the fundamentals all you want, but you get paid on price. So I'm a technician through and through. But again, I'm curious always about the fundamentals and about financial news. So that's how I use them, but I don't really benefit from them. So it's just, I say, for entertainment purposes.
Okay, so let's see. We still got Triple D in the background here. I thought I saw him. We'll be getting his thoughts on the price action coming in after that number. And I'm just looking. We did make a low at 44.81. And do I have anything on the dailies there? Nope. The next daily low, if you're looking for more, your next daily low comes in at 49.70. The only thing, just a little bit of word of caution here. The average daily ranges have been trending down. We got down to 43. So that's the expected move for the day. We've moved almost 60 here. So that's not saying that we can't have a 60, 70, 80 point down day. but just being, keeping within the averages of your respective average daily ranges, keeping that in mind. Is that something that you use too as far as targets? What do you use for targets once you get into your trades?
If I have a trend, there's nothing for me, at least, better than using the rising 20 or the declining 20 on the daily chart. I also look at support and resistance, but that's about it.
Okay. All right. So you'll just try and, instead of trying to pick a top and something, do you have anything that you like, any of these parabolic stocks, like SMCI or Nvidia, any of those stocks that you've been traded to the long side and maybe had an exit in them? Something that we could talk
Yeah,
about.
I have a call in my newsletter on SMCI and Nvidia to the downside today.
Whoa.
Yeah, if they break yesterday's low, which they probably will after today's gap. So I don't think there's going to be a huge move in those stocks to the downside, but they have a nice reversal bar. So if they break below it, we should see some follow through.
Okay. All right. And do you like to stick? Do you have a volume threshold for stocks? A volume or a price threshold for stocks that you like?
I don't have a price threshold, though. I noticed that I don't make much money on penny stocks, like under $1. I do trade anything above $1, but I stay away from anything under $1. And then volume-wise, for intraday trading, I need about 1 million shares or so on average. And then for swing trading, I need about 500,000 shares per day. But the thing about the gap strategy is that when the stock gaps, even if it averages only 300,000 shares, it will do 5 times that much the day of the gap. So I don't worry too much about volume, but I do worry about the spread and the liquidity at the open. But the average daily volume is not a huge thing for me because, again, I focus on gaps, and then gaps bring in a lot of volume.
Are you out there on the opening helping those market makers, putting orders out at that opening print? There's a lot of price inefficiencies at the open. There's a lot of opening order strategies. Are you in there trying to take advantage of that liquidity, or other people take the other side of the coin and say, you know what, I'm not going to compete with the big boys off the open. I'll use that first 15 minutes as parameters to look at the market. How do you use the open?
No, I use my first trade is usually at 9:31. Within the first minute, if I see a reversal bar on a gap that I like, I just get in it. So I'm right there at the open.
You like to be at the open, okay?
Absolutely.
And then what about the close? I mean, I like, we try and do technicals. We do technicals on this show, and closing prices. To me, there's a lot of significance in the closing price just from the fact that that's where larger traders are marked. So put a lot of emphasis on the open, but how much emphasis do you put on the close?
Not as much, but I like my swing trades to close strong or weak. So towards the close, I shift towards, to swing trading, to focusing on reviewing my list into the close. If there's a swing trade position that I wasn't sure about, and I see that it closed really weak, then I may get out of it. But I like the liquidity at the close. That's mostly what I like about it. But at the open, there's nothing like it, because there's traders trapped in trades that they don't want to be in, and so they act irrationally, and that's when I really take advantage.
Okay, so we're doing a lot of talk here about shorter term investing, right? And longer term investing is a whole different story. So for your longer term investing, is it just all technicals too, or do you put in some of the fundamentals?
All technicals, but here's where the fundamentals come in a little bit. If I'm going to back up the truck and have a really large position, I never feel comfortable doing it on a company that I know nothing about, on a small cap. So that's when the fundamentals come in. Like if if it's a big name that I recognize, then I don't mind doing a lot of volume. A lot of size. But otherwise, it's purely based on technicals.
Okay, so let's. We got a few minutes here up against the clock before we let you go. I'm gonna pull my charts up here, Aaron. If you could put my charts up here, and we could. I just would like to just walk us through. I don't know if your scans are ready or something yet, but just give us a couple stocks that you're looking at today, or maybe stocks you mentioned Nvidia, SMCI. Let's try and go through. Maybe two stocks on the short side, two stocks on the long side. S&P is now below 49.80, folks. They are absolutely pounding 49.70, I believe, is your 4 or 5 day low. So give us a couple charts to look at. Let me get the pre-market action here, and then we'll let you get on with your busy day.
No problem. Sounds good. So check out WCC. I don't even know the name of the company, but look at the gap. It's gapping to 164 below support. That looks good to me to the downside, because it's been rising and then broke out recently a couple of weeks ago, and now it's gapping below support. Look at TDC, Tom, David, Charlie, also below support on a large gap down. That looks nice. So as a short, these are two short candidates. In terms of bullish candidates, let me see. I don't have anything that I
don't have any bullets with the S&Ps getting lit up like a Christmas tree. I just want to see. Let's see this TDC, Terra Data Corp, earnings. So I see that it's trading lower. Q1 guidance below estimates. So there is news on that one, but that you don't let that affect the way you trade it, right? You're just purely trading the technicals. If you're shorting this thing off the open, or near the open, do you drill down on some shorter term charts for a potential stop, or do you hope to see some kind of sympathetic bounce off the open?
No, 100%. I will. If I get in short, my stop will always be the high of the day, or lower, or some price lower, but never above high of the day on the intraday timeframes. So if I find a pattern, a way to get in it, I'll get in it, and my stop will be above today's high.
Okay, before I let you go, you've worked, you've been around the street, you've traded with Red Dog, a couple of the excellent traders out there. Give us two or three, words of wisdom for people that, hey, this market, I missed out on this entire rally. I'm going to quit my job and start day trading now. What advice would you have for them?
To tell you the truth, I may be different than most other people in that way, but I don't actually recommend trading to family and friends unless they are committed to it. But most people want to get into trading because they think it's a quick way to make a lot of money. And I say, no, it's not. So you got to be all the way in or all the way out. I still tell them, invest long term, be invested in your 401ks, in your IRA accounts. But if you want to pursue trading, intraday trading and swing trading, you really have to be committed. So that's my general recommendation. But as far as like what to do, I always think there's a million ways to skin a cat. I always think that everybody should find a way that suit their own natural personality. So trade in a way that suits you, that works for you, that you agree with, that you absolutely love, and that's also objective, not based on some opinions and some news, like something that you can repeat on a day-to-day basis, and then that's objective. You're actually analyzing price action objectively, and that's the methodology that I trade. It's completely objective. If it's the only subjective part of it is when I let my own opinions and beliefs interfere, but otherwise it's an objective way to analyze price action.
Okay, so personality traits should be your trading style. I don't know if I'd recommend that to everybody in our chat here, but just a little joke here. We have been on the line with Sami Abusaad. He's Director of Education over there at T3, giving us a look at some of his strategies, long side, short side. Really appreciate you coming on, Sami. You go out there and get them. We'll talk to you again in the next couple of weeks.
Absolutely. Thanks for having me.